Mr. President, we've seen a number of battles here recently that involve the question of, is our country going to make laws by and for the powerful or by and for the people? We saw a health care debate where my colleagues across the aisle wanted to rip health care from 20 to 30 million hardworking Americans in order to deliver tax benefits to the very richest among us. Fortunately, we were able to stop that. We've seen the conversation here on the floor about the arbitration fairness regulation, which said nobody should be forced into an arbitration when the other side gets to hire the judge, gets to promise the judge future business, and gets to determine the outcome of the decision. And yet, my colleagues across the aisle voted for the powerful to be able to have this fixed system to cheat the consumers of America. And then we had most recently this question over the Consumer Financial Protection Bureau. And the people of the United States love the fact that we finally have an organization that fights for them in fairness in financial deals so that predatory lending will be brought to a halt. But my colleagues on the other side of the spectrum said, no, let's support the appointment of someone to run this who wants to tear down that organization so there will no longer be protection for the people. Time and time again, just within a few weeks, my colleagues across the aisle saying we are for the powerful to crush the people. Well, we are fighting for the people, and now we're fighting for the people on this horrendous tax legislation. And I've come to the floor to be with my colleague from Minnesota to point out some of the worst provisions of this bill. And I turn to her for her opening comments.
Thank you, Senator Merkley, for your leadership, Mr. President. This current tax code, I would love to see tax reform. I've long advocated for it, and I'd actually like to see the business rate go down. I'd like to see the money come in from overseas and put some incentives in place. But this bill is extreme. This bill puts $1.4 trillion hole in the debt. That's what it does, additional debt. And in fact, just yesterday, the Congressional Joint Committee on Taxation said that even when you account for any economic growth, and this is the umpire here, that would add $1 trillion to federal budget deficits over the next decade. So what I would like to see, and what I thought we were talking about at the beginning of the year, was a bipartisan effort, and 17 of us stood up just this week, 17 Democrats who are willing to cross the aisle, who've had a track record of working on bipartisan bills, and said, work with us. But instead what we have is a partisan bill that blows up the debt, a partisan bill that would be devastating to our economy, where no one has even had a hearing, where no one has even had to look at what the consequences would be, which literally on the hour, we're getting calls in my office from small businesses, from regular people, from Main Street businesses that have no idea what's going to happen to them under this bill. And all they know right now for sure is that it adds over $1 trillion to the debt. Where's the transportation funding we thought that we could do with this bill if we brought the money back from overseas and tied that into infrastructure funding? That didn't happen. What's missing from the bill? Well, where's getting rid of the oil giveaways? Where's implementing the buffer rule? Where's getting rid of something the president said that he wanted to change? And that is the carried interest rule. None of that is in there. Instead, what do we have? What are our constituents going to get here at Christmas? They're going to get a stocking full of a big lump of debt. And Senator Merkley, I think one of the things that we know is an issue with this bill is the double taxation that we see in the bill.
In fact, that is indeed one of the big lumps of coal that Americans are getting. 1 in 3 American taxpayers utilizes this deduction, and as should anyone who pays state and local taxes. How fair is it that on the money you have already paid out in taxes to one government organization, you then get taxed on by the federal government? Double taxation. The Republicans in this bill are standing for the unfair double taxation of Americans, and it's absolutely wrong, and it is a big deal. The average deduction in Oregon among those who use the SALT deduction is about $12,000. That is a very significant factor, which means their taxes are going to go up. The Republicans in this bill are saying yes to unfair double taxation, and we are saying no.
Another troubling aspect of this bill was the inclusion of a provision to repeal a key part of the Affordable Care Act that would kick 13 million people off of their insurance by 2027 and increase the individual market premiums by 10%. We should be helping with the premiums, not increasing the premiums. This means less money in the pocket of American middle-class families, less money to save for retirement, less money for college. That's what we're talking about here. The American people, in fact, want us to work together to make fixes to the Affordable Care Act. And that's what we did just about a month and a half ago. The Alexander Murray bill, 12 Republican, 12 Democratic co-sponsors. I am one of them. That bill is sitting out there, yet without even considering that, what does this bill do? It comes in RAM and gets rid of the individual mandate. Senators Alexander and Murray, what did they do? They held a series of hearings and discussions on common sense solutions. They actually had a hearing on their committee. They had governors come in, Democrats and Republicans together, and that's how they put that product together. It is a model for how you can put a bill together. But instead of that kind of bipartisan approach, this tax bill not only repeals an important part of the Affordable Care Act, but it would lead to hundreds of billions of dollars in cuts to Medicare and Medicaid, hurting our seniors, and both Minnesota and Oregon have significant rural populations. And those hospitals are just hanging on the edge as it is. And now what do? We sock them with this, getting rid of the individual mandate, which will in the end raise up the rates and hurt the Affordable Care Act, as opposed to making some common sense changes.
And another yet terrible provision in this bill is the Dynasty Loophole. Now, in a bill that the Republicans are saying is targeted at the middle class, why would you give $269 billion to the richest 0.2% of Americans? Envision a room with 1,000 people in it. Pick out the two richest people and give them $269 billion. That's what this bill does. Now, this Dynasty Loophole is a way for the richest Americans to bypass ever-paying capital gains as they pass their wealth from one generation to the next. It is an enormous tax dodge, but if you or me sell a property while we're alive, we have to pay capital gains on it. But the rich don't need to sell property in the course of their life. They can simply hold it to the end of their life and pass it on to the next generation, never paying capital gains. And the next generation gets it marked up to market rate so that that can never be recovered. Really, what we're talking about here is a principle that the early American founders really detested. They had seen in Europe that very rich families that could pass on wealth from one generation to the next could control power in the country. That was the vision of government by and for the powerful, accentuated by the passage of vast wealth from one generation to the next. But the Americans said, no, we want a different form of government, one which empowers decisions to make every family thrive, give them a chance, every family to succeed. That's the vision of we the people, and that is the opposite of this Dynasty Loophole. I dare a single Republican to come to this floor and explain how giving $269 billion to the richest 0.2% of Americans has anything to do with helping the middle class.
So this bill, as Senator Merkley has pointed out, is really a bait and switch. How? Well, under this bill, millions of middle-class Americans would end up paying more in taxes in the long run, right? Bait and switch. Get a little reduction, a few crumbs in your stocking in the short term. In the long run, many of the tax cuts that they receive, if they receive a tax cut at all, would only be temporary. In 10 years, most Americans earning $75,000 or less would pay more in taxes, while people earning more than $100,000 a year would continue to pay less. According to an analysis by the Institute on Taxation and Economic Policy, 644,000 Minnesotans with incomes below $153,800 would see a tax hike in 2027. Yes, that's almost 650,000 Minnesotans that would see a tax hike if they make below about $153,000. I want to highlight again what Senator Merkley already discussed with the elimination of the state and the local tax deductions. Many middle-class families rely on these. In my state, we have both an income tax and state property taxes. Over 900,000 households claim the state and local income tax deduction, and over 850,000 claim the property tax deduction. We have a lot of homeowners in Minnesota. Both of these deductions are important for a middle-class Minnesota family. We want people to own homes. We want to make it easier for middle-class people to own homes. For example, a policeman and a teacher with 2 children with a mortgage could see their taxes go up under this bill by $250 to $500 a year. Maybe my colleagues on the other side of the aisle don't think that's a lot. Well, that is a lot for a middle-class family in my state. And once the cuts disappear in 2027, their tax bill would be $3,000 higher. Why is that? Because it's not offset by the fact that they can no longer deduct their state and local taxes. One example. Senator Merkley has others.
So not only do we have the Dynasty Loophole, we also have a sweetheart deal for very well-off LLCs, the type of LLCs that President Trump has. He is rumored to have hundreds. I keep hearing the number 500. We don't actually have a document that tells us how many, but these high-end LLCs already get a big advantage over C corporations because C corporations pay a tax at the corporate level and then pay a tax at the individual level when the dividends are received. But here we have it, a sweetheart deal that would create a windfall of $362 billion with almost 90% of that going to the richest 1% of Americans. Time after time after time, what we see is not benefits to the middle class. What we see are sweetheart deals for the very rich.
The Senate bill also allows companies to blend the tax rate for income that's earned overseas, which may give companies incentives to move jobs to foreign countries, which creates a whole new tax avoidance scheme. Now, I wanted to bring down that rate to bring jobs here and to make sure that money is invested here and to bring some of the money, the trillions of dollars that overseas. That was a good idea. And the only question was, where was the rate? But not only did they change the rate, they actually changed the way we did those taxes. Bob Posen, the former chairman of the oldest mutual fund company in the United States, has noted that the system that's contained in this bill, which includes this new average minimum U.S. tax, is, quote, like Swiss cheese. It has so many holes that it would rarely be paid by U.S. firms. He goes on to say that, in fact, this proposal would encourage U.S. companies to relocate to foreign countries, a lot of their intellectual property. A minimum tax would be affected only if it applied, he says, to the foreign taxes paid by U.S. companies on a country-by-country basis, rather than on an aggregate basis across all foreign countries. Nevertheless, both the House and the Senate bill allow these companies to utilize this aggregate approach. Yet we have not had one hearing to look at this new system. Not only did we not have a hearing to look at what the new rate is, we didn't look at the effect of this global minimum tax, which encourages companies to place jobs in countries that have no taxes, so they're offset by the ones that have higher taxes. This bill would allow a one-time opportunity to bring back some of the trillions of dollars, and that's what we wanted to see in a bill. But that is not what we saw in this bill. And I have always said that if we could bring back that money from overseas, we should at least put a percentage of it in infrastructure. That was going to be a gain from this bill. Democrats and Republicans talked about this as a way of financing infrastructure when the American Society of Civil Engineers 2017 report card gave our nation's infrastructure an overall D+ grade. But is there any incentive for infrastructure in this bill? No. Is there any financing authority like we've had discussed and put bills forward on a bipartisan basis? No. Is there any chance to put any of this funding when we're building up over $1 trillion in debt into the highway fund? No. This money is not going to infrastructure for Americans, and it's not going to middle-class Americans.
We now go to the rapid round because we have 4 minutes left to cover our remaining topics. And this provision is an attack on renewable energy. What does this Senate bill do? It undermines the integrity of the usefulness of the solar and wind energy credits. And then it proceeds to fail to address the expiring credits or the credits that need to be renewed in geothermal and in biomass and in charging infrastructure and in microhydropower. And then the House side makes it worse by proceeding to get rid of the credit for electric vehicles. What we have here is an effort to hand over the leadership on the next big vision for power in the world to the Chinese. Republicans are trying to help the Chinese take the lead and put America behind. That's not America first, that's America behind, and it is wrong, and we oppose it.
And again, I conclude by asking our colleagues on the other side of the aisle to work with us. 18 senators, Democrats, stood together with a track record of working across the aisle, asked them to join us to work on a bill that would actually help the American people, that wouldn't add this big lump of debt into American stockings. But that's not what this bill is. This bill is about debt, it's about special interest, and it doesn't help the middle class. Thank you, Mr. President. I yield the floor.
And the last loophole that I will point out is the Trump tax loophole. Well, we know that on the one tax return we have for President Trump, that the only reason he paid taxes was the alternative minimum tax. And in fact, that he paid 38 million taxes in that year, and we're told he'd only have paid about 5 million if it wasn't for the alternative minimum. So there we have it, another big provision for the richest of America. This is not a bill that helps the middle class. It raises the tax on millions and millions of middle-class Americans, while provision after provision after provision is targeted at the very richest Americans. We need to stop this bill. Thank you, Mr. President.